Good morning, and it's the Thanksgiving special for the Wall Street Weekly Wrap Up. There will be no show on Saturday. The reason is that Friday is a half a day trading and it usually doesn't reflect the market at all. So, no news comes out that's stock related usually, and I like to end it on this Wednesday. So, today is Thursday, we'll do it. Happy Thanksgiving, and let's get into it. A lot of different things this week, and I wanted to kind of go into the more of a trends that affect the market. Of course, we had NVDA come out with the earnings. That was what everybody was waiting for, and they beat handily by a lot. The revenues, a monster 205% year to year. That's incredible. You went from $9 billion, to $18 billion. It's just incredible. Data centers up 279%. So it's a huge chunk. Nvidia's making a lot of money. They can price the chips. The demand is there. They did say China was going to go slow down, and they look at probably a 20% drop in China. But boy, you got a lot of positive in Nvidia. I mean, how could you not love it? And remember, we were in Nvidia in November, and it has been our best performing stock. One of the side things, we've been watching gasoline drop, but look at the uranium prices going the other way. You know, are we going to use more uranium? No, but Russia, who does mine it, is not mining so much as they would normally do. So prices are going up. And I expect if the Ukraine war, Russia ends someday, this will go down back to normal. But right now, you have a country that's, taking a lot of the soldiers from the mines and putting them in the war, and they don't have as much uranium coming out anymore. This is the indicator here, and what I wanted to show, just all the metals that we mine. I'm going to move myself out over here a little bit. And, iron is just phenomenal. I mean, we mine more iron for everything than everything else. And then you've got aluminum, which is not as much. And then chromium is really surprising because we do a lot of work with chrome plating, chrome devices. And then copper, of course, number 4, and that's the one that everybody watches. Copper is still below $4 a pound, which is high. Gold knocking at 2,000 again. So you hear the gold bugs say, "Oh, it's time to buy gold." There's always a good time to buy gold when you talk to these people. There's never a bad time to buy gold. So oil still below $80 a barrel. Remember, $95 in September. It's gone down. Gasoline is very low. We look at the averages. I mean, holy smokes! You just got to look at this Nasdaq. I mean, up 36%. Remember, around about halfway mark in July, we're at 18%, and people. I said you could just take the averages if you just bought the Nasdaq and go home. No, you could have made more. Look at this, and our portfolio is reflecting the S&P, heavily weighted on technology, but our goal is to beat the 18%, which we are doing. And that's not going to happen every year, but we've done it every year. And that's the big thing, is we want to be in the best companies of the 11 sectors, and we try to be in there. We got to get in the materials sector. I'm hoping in December we'll pick up some material stocks and go that way, because right now we're it's low. The cycle's low, copper's low, everything's low, but maybe get into steel or somebody else. If they're coming down to 52-week lows, these are the times to buy a company in the material sector. Don't buy it at the high, buy it at the lows, because it's a cyclical sector. It goes up and down, up and down. And the Russell's positive too. And some of the things I'm watching is rice. India banned exports of rice, so it drives up rice in that area. And you got to remember, in the Asian community, that's a big source of the food. Rice is the number one product they eat, not potatoes like in the United States. The rough rice price, $17. Remember, there was a couple times in history where it got up about 20, but we're all watching it because, there's going to be a lot of issues. If the rice prices go up, there's going to be issues of hunger everywhere. Housing prices, rents increased 3% on an annual basis after dropping for several times. But when we go out and we just look at the 1970 chart, housing versus renting, it is exceptionally high for rent. So, those that got into a house, congratulations. Those that are on a rent, you know what it's like. It's brutal. Everybody's raising the rent, 50 extra bucks a year for the next year, or $100 a month for the next year, or even worse if you're in a bigger city. So, and of course, you want to buy a house, but holy smokes, they're talking 8% interest rates, and that's going to be a lot of money compared to what you're doing. So it's a for the people who own houses and renting them, it's not bad, but otherwise it's pretty brutal if you have to pay this rent. Because remember, you pay rent, you get nothing for deductions and stuff. And the dollar is going down. I mean, we were high against a lot of currencies, particularly like the Japanese yen, but now we're starting to drop a little bit. And it just remember these are cyclical revolutions. Usually, the dollar, the yen, the pound, the euro go up in cycles. So. Never does it keep on going straight down. Currencies out in South America and Africa, that's a different animal. But the four big currencies that I see all the time, I watch all the time, we're going in, cyclical motions. But, if you're traveling, it's going to cost more to buy things. In gasoline, it was $3.39 today in Illinois, and it's down to the lowest peak. Remember, $95 in September. There's a little peak here, then it dropped like a rock. And this is where people think, oh, it's going to go to $100 and, 110. Somebody was talking 150. U.S. companies are putting out a lot of oil. I mean, the Saudis have cut quite a bit, and the U.S. companies have made up their difference, and that's the trouble. The world wants cheaper oil, and again, if Putin is dead, as they all talk about in Russian social media, then maybe the war ends, and maybe the gasoline prices go down even further as Russia starts to accumulate. But we'll see. No confirmation from any major news organization. And of course, ARM Holdings. I mean, it came out. We got into it. We bought our initial 50% stake in it, and watched it go down, and and it was in the 50s. And I says, well, that's why I usually ease into a third at a time, but we had 50% because it's nice. It wasn't an unreasonable price. But now the Grace Hopper Super Chip, which has the ARM CPU, is going to be $1 billion line, and that's going to be well. Everybody, ARM's in everything, Apple, iPhones, everything. So they're going to do well, and it's one of those companies. You want to get in. Downside is probably 20%. Upside, who knows? I mean, we're all going to look at the earnings. That's going to be a number to look in the futures. But, we're trying to stay with the big AI companies that have proven sales and technology. And, one of our industrials, we're short one. One we're going to look at is this John Deere. When it keeps on going down, holy smokes, 20% sale decline in all three businesses, 10 to 20%. 52-week low. You know what? They got this whole agricultural thing. The remote autonomous tractors coming. And it's going to be John Deere is going to be probably the one that has it out there. I mean, can you imagine you're doing the harvest? You just set the tractor out and fill it up every 8 hours, and you're just going out there. It's amazing. And if it's electric, you may be able to run it till the charge runs out, which could be, maybe a few days if it's solar powered. So I watch it. I watch these people in construction with Caterpillar equipment, all laser guided, all precise, digging and everything else. That's the future. And this is an industry, it can grow by leaps and bounds. So you're going to see a lot of growth eventually. It's done well. I mean, if you bought this stock in, I remember the stock in the 50s, so it's been up a while, but now it's coming down. When do you want to buy it? I go in here, and the number is, it's not a bad buy now. It's coming course to a wedge, and which way it breaks out, it might go down, but you're going to get into it. Just ease into it. Buy a third of it, your portfolio position, and then wait a while, and then you can buy the other third and the other third. And again, we're overweight a lot of different areas. The tech sector and the communication services and computer discretionary. We sold SoFi. It went below the 200-day moving average. That's never a good sign. And Biden forgave over so many millions of billions of dollars. I think $1.2 billion in student loans for those that were paying forever and never getting out of it and things like that. How did it affect SoFi? I'm not going to find out. We just look at the chart. The chart said the number went below the 200-day moving average. We're getting out. We're not going to hope for it to bounce back and stuff. It's a sign to sell. It's an easy sign to sell. You just say, oh, I'd like to stick in it a while. Well, we still got Morgan Stanley. We got J.P. Morgan. We were overweight financials. Now we're back to equal weight. When we look at the companies of technology, that are, you know, tech related. You know, I don't know if Netflix is a technology company, but I kind of call it, you know. But when you look at what has the best growth year to year coming in this quarter, because we got most of them reported earnings, look at the top six: NVDA, Meta, Microsoft, Amazon, Google, Tesla. That's all the stocks we own, really. I mean, we have those stocks. You know, we don't show ARM because we don't know what the number is, but that is the key thing. You know, we want to buy stocks growing revenue, and I don't care what it is. If it's utilities, we want, you know, it grows slow, but it makes some money. We want to get in the stocks that, you know, are growing. PepsiCo, J.P. Morgan. We don't want to have companies like Apple, 4 consecutive quarters of negative results. So uh, the idea is if we get positive revenue, the chart and the price will eventually, you know, line up. And like I said, hopefully you have a good Thanksgiving today. Don't eat too much, and I'll see you next Saturday.